everyone, my name is Ivan Delgado, market as commentator at Global Prime Brokerage Firm. With me today, I have Eusebio Nanni. Eusebio, how are you today?
I'm very fine, Ivan. And what about you?
I'm very good. I'm based here in Bali, Indonesia. Eusebio is based in Belgium. We have about a 6-hour difference. And today we're going to have a fascinating conversation about his career as a trader. Eusebio has been a full-time trader for about 3 decades. Correct me if I'm wrong, but I would say 3 decades.
A full-time trader, not a part-time trader and investors for around 40 years now,
Okay.
38
Wow.
years,
Mm-hmm.
and a full-time trader, in fact, since 2008. So now it's 13 years.
Mm-hmm.
I'm a full-time trader. Yeah.
Right.
And I share my life between Belgium and France. And for the moment, I'm in France.
Okay, perfect.
Yeah.
Now, you are also a lead instructor in the MAX trading system.
Correct.
You have been a proponent from the very beginning of systems that are very rules-based. Essentially, yes. There is very little discretion in your trading. It's very systematic. And I gotta say that this is also talking from my own experience, because I did take up both your Max Standard and Max ETF course very early in my career. And so I can really vouch for your education. And I'm not gonna be following anyone's advice blindly, but as I said, I talk from my experience, and also something that we share together, Global Prime as a brokerage firm and you as an educator and as a full-time trader, is the high ratings in Forex Peace Army. You maintain about a 4.7 out of 5 stars for over 10 years, sorry. So yep. That is a big testament and a big statement of how high the education that you guys deliver in the Max trading system.
And we are glad and proud of it.
Absolutely, yes. Now, I got to say something, and allow me to say this, okay? And this is something that we haven't prepared. You see this book here, Market Wizards, Unknown Market Wizards. I do believe that you have been flying off the radar. You are not a celebrity trader, but I think that you've made equal, if not more merits that any trader featured in this book to actually be telling the story. I've actually tried my best to find interviews of you out there, and I really struggle. You're not someone who is out there showing your public face that often. So that's why I'm very excited, because today I have the opportunity to dig deep into the DNA of you, Eusebio Nanni, as a trader. So that's why I'm excited today.
Yeah, thank you very much. And I would like to say, I'm not looking for celebrity. I'm not interested with celebrity and to be known by the worldwide environment. I just like to share my experience. Experience I have myself get from other mentors. And so that is my passion in life. Being known as a celebrity, I'm not interested with that. This is why I have never accepted to make an interview with other celebrities.
And I think there's a very strong correlation between trying to portray yourself as a celebrity and that actually just essentially being a red flag, you know, someone who really is seeking out that popularity. And if you just mind your own business, you do your trading, you get your results, and then you try to transform other people's life to the best of your abilities, but you don't have a reason to actually go out there and try to just have a big name. That actually, I think that grows organically by people talking about you highly.
Correct.
So, with that being said, great introduction. Let's dig into your story as a trader. Okay, everybody has a story behind why they became interested in the first place. What is your unique story that got you started in trading?
Oh, that's even a fun story. I am a past software engineer, and I have always worked in the IT industry, and I have worked as a software engineer for around 30 years. And during the 15 first years, I have worked for industrial group. And for the 15 last years, essentially in the financial market with banks, important banks in Europe here. But the first day I have begun to work, my first thought has been, okay, now you have to think for your retirement. And then I began to be interested in investing. I had some friends, some colleagues who were already members of investment clubs, for example, and I became interested to invest in the stock market. And over time, I get interested in other market, the futures market, the option market. And then in 2000, with the expansion of internet and the tools available for the traders, I came to the knowledge of the Forex market, the currency market. And I have found that market extremely fascinating. And at that moment, I have realized that the trading system or the investment system I was using essentially in the stock market was not working so well in the Forex market. And then I have tried to understand by myself how the market was working. And finally, I came to the conclusion that it was much more efficient to be taught by a mentor. And then I have made some search about mentors. I have not found a lot of them, or at least good ones. And one day I have found Dr. James Pruitt, named as Tiger. And in 2008, at the beginning of 2008, I have taken his course. It was the second time Tiger was teaching his trading system, and I have discovered a new world. And so I decided that his method was perfectly adapted to my own trader temperament, and I have decided to dedicate the rest of my life to that approach in the market, and then to improve my education, because I consider that having a trading strategy is not enough. We need to understand also why the market is moving as it is moving, and so what are the real driving factors in the market. And this is a never-ending learning process.
Yeah, absolutely. You said that when you met the Tiger, it was an inflection point for you, and it's something that really resonates with your trader profile.
Exactly.
Why is that? Is it because of the systematic nature of the system?
There are several points. First of all, my best approach in the market or my trading style is to be a trend following trader. I like to trade trends. I like to stay in front of my screen during an entire day and to try to catch a trend when, of course, a trend unfolds, and to handle the trade during several hours to make scaling, so to add to the position, to progressively build a larger position and to extract more profit when everything goes fine. And so this corresponds to my temperament. So a lot of patience, a lot of disciplines, and then having a rule-based system with almost no subjective approach, no subjective points. And this is what I like, of course, in trading, and what I try to continuously improve in my approach.
Yeah. Now, what does MAX stand for?
The MAX stands for three concepts. It's an acronym. M stands for momentum. In fact, we want to consider opening a trade when we see momentum in the market. And over time, I have added another criteria. We want to see not only momentum, but also enough volatility. And this is how our rules are based. When we see enough volatility and enough momentum, we have an opportunity for a possible trade. Not necessarily a trade, but a possible trade. Then the A stands for acceleration. Acceleration, in this case, describes the entire scaling technique, how to progressively add to an initial position, to build a larger position while controlling the risk, because this is extremely important. If we don't pay attention, the risk will explode, and this can kill a trading account. And then the X stands for exit. At some point, of course, we have to reduce the risk by banking some profit or by reducing the losses when a trade goes wrong.
Yeah, absolutely.
This is what the MAX means. Yeah.
Right. Now, why are you so devoted to the MAX system to the point that you became the lead instructor? Can you elaborate a little bit further on the story? Because from what I know, in my experience being a student of the MAX many years ago, Tiger no longer is with us, unfortunately, and you took up the baton, correct?
Yeah, indeed. Jim Tiger passed away in July 2009, if I remember correctly.
Yeah.
What I have found fascinating with Jim and with his training is after each training session, he was assigning homework. And we had to make the homework. And it was grading the homework in the finest detail, just to be sure that we are applying the rules and the concept correctly. And I have found that approach absolutely amazing, fantastic, exceptional. And so I have dedicated my time, almost 24 hours a day, to make my homework and to make my homework as best as possible. And at some point, the health of Jim has begun to degrade, and he has asked some help from his student to grade the students' homework. There was a possibility also to participate, to retake the course after the first one, and I have been involved in all the following courses Jim was giving. And at some point, so he has asked help, and I have volunteered to help him. And this has been also an important learning curve for me. Grading the homework of the other students has helped me to go faster in the understanding of the concept and the rules of the max and the conditions when we can apply these rules. And when in 2009 Jim passed away, his two partners, Chris and Craig, who were supporting Jim since the beginning, have asked me if I would agree to take the role of the teacher of the max, so to supplement the passed away of Jim. And I have of course accepted, because at that time I had decided to become a full-time trader, and so I have accepted because teaching forced me to go deeper into the details of the approach and to better understand. When you understand correctly, or at best a concept, it's easier to teach it. And so I have accepted, and since then, so it's a passion and a pleasure to teach the max.
Yeah. Okay. Now, for those that are watching this interview, don't despair, because we are going to get into the visuals. So for you to make a proper distinction of what the max system entails, but we're just trying to build up a little bit of contextual setting for you to understand, where Eusebio comes from, and we're going to get there. So just a little bit of patience. Now, I want to ask you, in terms of education, maintaining a 4.7 star out of 5 in Forex Peace Army for about 10 years is not an easy task. It takes a lot of hard work. It takes obviously being very dedicated to your students. What do you think are the key ingredients for you to maintain such a high rating as an educator, and for the max system to be thriving in the eyes of the beholder? Go ahead.
In fact, there are several points, I think.
Yeah.
The first point is my objective is to make our student independent. Because when a trader is dependent on a mentor or on a teacher or someone else, so when it becomes for some reason alone, it will be completely lost. And so my aim is to make of our student completely independent at some point. And of course, we give them all the support to achieve that objective. And to do that, it is extremely important to stay closely connected with the market and to understand what are the conditions in the market, and to explain these conditions and why and how these conditions impact in the market, to train them to understand the global context under which the market is working. And I think this is a key point. This is what I have, one of the points I have added to the max. The max is basically a technical analysis approach based on rules, but I have one ingredient I have added is the understanding of the global context. What are the roles of the central banks? What are the roles and the impact of the geopoliticals? What are the roles of the news release in terms of driving factors? And this has been also an important game changer for many of our students, because with that understanding, they can they build much more confidence in the way they trade with the max, because they understand why a movement is unfolding in such a way, and they understand when not to trade, in fact, or when not to trade in a specific direction.
Yeah, and I believe that traders many times they live at times in their own echo chambers by defending the camp of, oh, I'm just a technician, I'm just defending technicals, and others are just going to be fundamentals. And I really think that both go hand in hand. You cannot really be fully trading the markets and be sustainable for a long period of time and having prosperity and longevity unless you understand both what you just mentioned, which at the whys, fundamentals, and hows, how we get to point A from point A to point B. That is through the technicals, right? That we can get to those journeys from one destination to another. So I'm really glad that you touch on that, because I think that to be a trader, we have to be both equipped for the technicals and the fundamentals. And I think the max system, the only discretionary part would be being in tune with the global context, correct? That's not something that you cannot mechanically really define, but rather having a mentor like yourself.
That's correct indeed, because understanding the global context always involves some interpretation of the events. You consider, for example, the news release, and let's take the news release, which is the most followed by all the traders around the world, the non-farm payroll on the US dollar, the first Friday of each month, most of the time. Even when we have a big surprise in the non-farm payroll, the market does not necessarily react the same way. Sometimes the market reacts as expected, sometimes the market reacts in the opposite direction, and sometimes there is no reaction at all. And many traders do not understand that, because there is more than that behind a news release. We have to take into account what has happened the previous days, we have to take into account the expectations of the following days, and we have to take also into account what the other currencies are doing. So, and this is a complex environment to learn. And again, this is the kind of experience which is a never-ending learning process. Each day brings new aspect of the market.
Absolutely, yeah. Now, do you have any idea, more or less, how many students you got through the doors over the years? More or less, roughly, the number of students in the max system ever since you took over?
Yeah, we have trained more than 2,000 students, around 2,200. I don't have the precise number. Chris, who is responsible for the support, know the exact number, but it is more than 2,000 now.
Wow. Now, let me ask you, how long did it take you for you to really have that realization of, hey, it looks like I am making it as a trader? And by that, what I mean is like consistently making profits out of the market. That would be the first question. And the second one is, what is the estimate or the average time that it takes for a student of yours to start showing consistency in their results?
Oh, this is not a question which is easy to answer. In my personal case, because I was fully dedicated almost 24 hours, 7 days a week, it took me 6 months to become consistently profitable with the max. But because I had decided I want to be a full-time trader, and I have organized myself to be successful in maximum 2 years. And if in 2 years I would fail, I would have searched for another path in trading. It took me 6 months, but now depending on the students, it depends. It depends how much time the student can dedicate to learn the approach, the trading methodology. It can be a few months. It can be sometimes several years. I have seen many max traders taking 3 years, 4 years, 5 years before having the right mindset, to make the right shift in the mindset to become successful, in fact, because there are a lot of blocks the traders have in their mind, because trading is also a psychological game. There is a lot of psychological aspect, and we have to overcome all these blocks in our mind. And so it takes time. This takes time.
Yeah, and they certainly have to go through at times what might seem a rough patch, because they are given very dense assignments at times. They really need to complete all the homework, and maybe people might not want to be putting in the work, and they just want to get into that flow of just trading the markets, just looking to make money. But they have to understand that it takes at times a very prolonged period to really build a strong foundation, to the point, and this is something that I noticed, you being a mentor in the max trading, you being the main mentor, that for you every single thing around the max is second nature. It's like you close your eyes and you can really tell absolutely every single rule of the max. And obviously that has been collected through many thousands of hours of dedicating yourself to the system.
Oh yeah, just to give you a small example how I am dedicated to that and why this is a successful approach. Whenever I prepare a new course session, I always force myself to prepare a new example and fresh example. I don't use the same past statics chart. I always take example from the moment. And so I have accumulated thousands and thousands and thousands of screenshots just to illustrate the concept. And so this proves also that the max is working. The approach is working over time. And this is also an important aspect. If you remember, one of the homework we assign to our students is what I call the statistical homework, when we ask them to collect 200 entry setups, so 200 trades, just to prove them the statistics about the max. So it is tedious, it is boring, but those who make that homework extract a great benefit from that homework, and that helps to make the shift in their mindset. Yeah. Realizing that one losing trade, one successful trade does not make the trader, but it is a long series of trades which makes the trader.
Yeah. Okay. So now we get into the time where I'd really like to get into the nitty and gritty of the max system. We've gone for about 20-25 minutes. So you are teaching the max the max primer, the max standard, the max ETF, the max SAM. Would you mind to share your screen and perhaps give a distinction and a brief introduction about the different systems and what they entail?
Yeah, in fact, there are not different systems. There are different levels of the max, from the simplest one to the most complete. And
let me rephrase that. The same discipline, the same system, just different modalities, different variations of it.
Exactly. Yeah. And so we have 4 levels: the max primer, the max standard, the max SAM, and the max advanced. ETF was a name we have introduced because at some point we have been forced to tweak some details of the trading system, and I will explain why. And we have called that concept that tweaks the ETF, extended trading format. But now we have eliminated that term and came back to the original term, the max. And so I can illustrate on some chart.
That'll be great. That'll be great, Eusebio. Yes.
Yeah. So let me share my screen now.
Yes.
And I will take this one. And tell me when you will see the chart.
And just to mention, for those that are not familiar with the max system, to me, what struck me the most being a student many years ago are 2 things. Your extreme attention to detail and how systematic the system is, and also how intense the focus towards risk management was. And you place what you call emergency stop loss, but it doesn't mean that that's going to be your maximum loss. It means that in case of a black swan event or some type of big candle, you will always have your downside protected. So please, Eusebio, take it away and introduce to all of us the max system.
Yeah, that's perfectly correct. In fact, I define a good trading system as a trading system having 5 pillars. The first pillar is the trading system itself, the trading strategy, which is illustrated by the chart there, its indicators, its template. Then we have, of course, the understanding of the global context. Then a very important aspect, as you told, is the trade risk management and the money management. Then there is also the mindset, the psychological mindset we need to have, the shift we have to make. And I don't agree with many psychological coach on that point. And then the 5th pillar is the organization. When we want to trade as a professional trader, part-time or full-time, we need to have also a good organization, which is part of the trading plan or the business plan. Yeah. Now, the different level of the max are the following. When we consider the max primer level, for the trading strategy itself, so we have our main chart and just some indicators on the chart. And these indicators help just to time a trade. They do not help to define when we need to go long or when we need to go short. The global context tells us what is the direction we have to take. And then the trading system helps to time the trade. For example, if the global context tells us that on this pair today I have taken the euro kiwi, or I have taken a pair randomly, if the global context tells us to go long, for example, then with our technical indicator, we will find an entry setup. For example, here on this candle, we have a perfect the small panel of Zoom is somewhat disturbing. So here we have an entry setup which correspond to a set of conditions telling us that on this candle, this is the right moment to take a long trade. And so we have an indicator which helps us to consider when an uptrend will start. And then we have other indicators telling us when we have to consider to bank some profit, where to place our stop loss, and how to adjust the stop loss along the trade. And with the max primer, which is the basic level of the max, we have one entry, possibly one partial exit, and then one final exit. So this is the most simplest form of trading with the max. When we consider the max standard, including the entire scaling process, this means that along a trend, we can add to a trade, we can make scalings, controlling the risk, because the risk must be controlled. Then we will use more indicators. And many traders are afraid to see many indicators on the chart.
Yes.
But because they have a false assumption, they believe that an indicator must predict what the price should do. But in fact, we do not use the indicator that way. We use an indicator to tell us when the risk, which is appearing when the price begins to pull back, when the risk will become too much important. So it's a help to quantify when the risk forces us to take a decision to reduce that risk or to bank some profit. For example, if we trade this downtrend, for example, and we see this pullback, which begins to start with one or two blue candles, we never know in advance how far the pullback will go. It can be even a trend reversal for a strong uptrend. And so we need to know when we have to stop, in fact, the trade we are handling. And this is where the trade risk management is so important. So the indicators help us to define, to quantify when the risk becomes too much important. And we use several types of exit technique based on indicators, based on price action, based on a combination of them, based on time consideration if we day trade, in order to have our exit along the trend as accurate as possible. And sometimes we are extremely accurate. We are able, for example, in this downtrend, we have a very nice exit setup right in this area with what we call our mid-tiger tunnel rejection, for example. And when we know all the route, we can pinpoint them immediately, and we can see immediately on the chart where to make an exit or where to make an entry. So this is the max standard. I call that the flagship level of the max. Then we have more elaborated version of the max.
Eusebio, may I stop you right there for a second? Because I got curious about, you mentioned you got 5 cornerstones or 5 key pillars. Number 4 being psychology, and you said that you don't tend to agree with most of what is being endorsed out there. What is your view around psychology in trading?
In fact, it's the following. Many explain that and use techniques to control our emotions. Because if we trade under emotions, we can make a lot of errors. And that's true. And the emotions can come from fears of missing an opportunity, fear of having a losing trade, fear of making too big profits. This kind of fear also exists. Fear that something wrong will happen while we are in a trade. And personally, and based on my experience, I consider that we don't need to control our emotions at some point. And I believe that our emotions also teach us something very important when we trade. But in contrast, we have to control our actions. We have to control our decisions. And this is a discipline, in fact. And so this means also that when we begin to trade, we need to have a preparation step. And in my preparation step, I make an evaluation of my psychological level. Am I too overwhelmed by some emotions if this is the case, then I decide not to trade, simply because I know that in such a case, I will not be able to control my decision and to control my action. But if I feel normal, even if I have emotions, that I stay disciplined. And this is why on my chart, just to help me, I have always that mantra, patience and discipline. And this helps me to concentrate, even if something is not perfect in my mind on the psych aspect. So controlling the actions. This is why we have to make that evaluation every day. And for example, if I feel too tired, then I know that I will not have a clear mind, clear enough. So I decide not to trade, simply. This is part also of the trade risk management. So the traders is a risk for himself. We are our worst enemy. And so we need to control ourselves, and so to be realistic and to accept who we are and to be responsible of our decisions.
Yeah, one of the things that struck me when I took the course, as I said many years ago, is that I see you as a trader being overly focused on risk management. And for you, at the core of the system, there's not so much focus on what the market will deliver in terms of the profits. That's something that you seem to actually just let the market determine what's going to be, but you are overly focused on the downside and how you're going to be managing, to the extent that you also introduce some topics that are very unique to just the MAX system. For example, every single time that you engage in a trade campaign, maybe that's going to get you into 5 scale-ins, a few scale-outs, but every single time that you do a scale-in, that actually reduces your overall global risk. And that's a very interesting concept that you perhaps can touch on either now or in the next 5 or 10 minutes, but it's very interesting, that concept as well.
Yeah, and it's counterintuitive.
Yes,
because
counterintuitive, absolutely.
Yeah, for many traders, when you make scaling, you increase your risk. This means that, in fact, we need to better understand the nature of risk. What is a risk when we take a trade? Of course, the usual definition of the risk is the maximum loss we can face when we are in a trade. And so considering the maximum loss we can have in a trade should be always the first decision in a trade. And after that, we need to control the risk. This means also, and this is an exercise, a test we frequently make with our students. We ask them 2 simple questions. The first question is, what is the essence of trading? What is the essence of trading? And of course, a lot of answer is, the essence of trading is to make money. No, making money is the result of the trading process. The essence of trading is to assess a risk and then to decide to accept or to refuse that risk. But once we accept the risk, we have a trade. And then the second question is, now, once you are in a trade, what is your priority, your first priority? And this is where the trade risk management comes. The first priority of the trader is to control the risk, progressively decreasing that risk until we reach a status when the trade is risk-free. And when we apply this kind of meta concept, then making scale-ins become easier if we know at each moment of the trade what the risk is and how the risk evolves and how we can control that risk. For example, by adjusting our stop loss, by making some partial exit, then making, when the trend allows to make 3, 4, 5, 6 scale-ins, then we can do that in a very, very comfortable way. And we will observe at some point, there is a turning point at some moment along the trend when whatever the number of scaling you can make, the profit is guaranteed, and the profit makes only one thing, it's increasing.
Yeah.
So the risk control is essential. And we have tools for that. We have an expert advisor, which is called the Max Trade Monitor, which always display when a trade is open, how the risk is evolving when we take these 2 kinds of decisions. And so it's a great, great tool to control the risk.
Okay, so Eusebio, we kind of opened a few brackets here. We've touched on some of the concepts that I found were very important. Can you just keep building up and explain what would be the next step in the learning curve for a student that goes and transitions from the Max Primer to the Max Standard to the Max ETF and then eventually the Max SAM? Please take it away.
Indeed. So in the Max Primer, as I have just explained previously, we teach simple entry and exit technique with no scaling. Of course, we complete the training with an introduction to the global context understanding. And of course, understanding the context is a huge task, and not all the traders have time enough to dedicate to make all the research which are necessary to find all the information which are necessary to understand the concept. And so we have developed also a set of information we provide for most of them for free to everyone, Max members or not. And I will show these informations later. And then with other levels of the Max, we go deeper into the technical analysis with additional entry and exit techniques, additional approach for the trade risk management. We go deeper into the global context understanding. And in the Max Advanced, the main feature of the Max Advanced are we consider the market in a more global way. We analyze the correlations which may exist between pairs and why these correlations are existing, and how can we better choose the pair to trade under the context. Because depending on the event, some pairs will nicely trend, some pairs will not trend at all. And so we introduce a tool, for example, the currency meter, which helps to see what is happening, in fact, in each individual currencies. It's not a trading tool by itself, but it helps to pinpoint our attention that something on some currency is happening. And so it's our task to understand why. And then I introduce a second important subject, which is the subject of the discretionary situations. How can we be somewhat more flexible in our tools, which are strict rules, which are rigid rules, by the way, but how can we introduce a small subjectivity to avoid, for example, taking too many partial profits, and so to try to stay much more time in a trend and to extract as much profit as possible from a trend. So with some subjectivity, but always a subjectivity controlled by the trade risk management approach.
Okay, now one of the...
And in the MaxSum, the last level, the MaxSum, and I'm going to show you an example of a MaxSum chart, this one. We introduce another way to represent the price movement using some other price representation, like the constant range bar, for example, like the Renko, like the mean Renko or the tick bar chart, in order to catch more details in the price movement and to have in our disposal more decision point along a movement. And these charts are very fast charts if we trade a small time frame like the 5-minute time frame, but they provide many more opportunities. And so we can make 10-15 trades during a day during the European session with such kind of chart with just one pair. Not every day, of course, it depends on the trend, but we can make a lot of trade, and it can be extremely efficient. So, but this requires some skills of dedication, skills of concentration, and speed in the execution. When we have an entry or an exit setup, we must not hesitate. We must push the trigger when it is time to push the trigger.
Yeah, and it looks like the GBP New Zealand, the one that you have on display right here, this would be pretty much Goldilocks conditions to be trading and using the SAM, because it's nicely trending, and I suppose it would be giving a fair amount of opportunities to be in and out. So I think it's fair to say that as you move up the ladder from the Max Primer all the way to the Max SAM, the main difference at the end of the day is the activity that you're exposed to.
Yes. Indeed. With the Max Primer, for example, we can consider, when we trade in the 5-minute time, we can trade the Max in any time frame. But by essence, the Max is a day trading system. So in the way Jim has created the Max. With the Max Primer, for each pair, we can consider to have 2 or 3 trades per day when we cover the 3 sessions, the Asian session, the European session, and the US session. With the Max Standard, we may sometimes have less trade because we try to exploit an entire trend, but we extract much more profit.
Yes.
And a trend can last several hours. I have seen trend lasting 12 hours, 13 hours. And so when we are able to handle such a trend, so the results are fantastic. Of course, there are days with only a tiny profit, of course. We must be honest, because this is the nature of trading. And with the max sum, we may have between 5, 10, 15 trades per day with just one pair. And so when we monitor and trade 2 pairs simultaneously, we have more opportunities than we can ever handle. So
yeah. So
and to come back to a previous question you had about the profit we can extract from a trend, we try to get what the market allows us to take. We do not fix, for example, a target profit. We are not interested to take a 1-to-1, a 2-to-1, a 3-to-1 reward to risk ratio, because for me it makes no sense. If the trend, if there is a trend, why not extract as much profit as possible, trying to exploit the entire trend? So if it is 1 hour, it's 1 hour. If it is 10 hours, it's 10 hours. Just to give you a small example, one day last week was a very boring day, and I have ended my day with a profit, but with several trades, 7 or 8 trades. But my global profit has been 0.5%, just 0.5%, and I have been happy with that because it was a profitable day. A few years ago, when there has been, you remember, the vote for the Brexit, that day, that Monday, I think it was a Monday, I was teaching a session of the Max Advanced course, and I knew that the first result of the vote were coming, and I wanted to trade that situation. And then I have succeeded to trade the Brexit. I have made just 3 trades, 5 hours of trading, but I have made 337 to 1 reward to risk ratio with just 3 trades. Just exploiting almost the entire downtrend the pound yen, it was the pound yen, has made. So exploiting as much as possible from a trend. And so this is the essence of the max.
Exactly. Exposing yourself to whatever the market is going to deliver to you on the upside, and always making sure that the downside is going to be protected, and you're going to be mitigating the risk whenever the market is telling you, hey, it is time to actually go through a period of damage prevention. And
exactly.
And the 337, that trade alone pays for an infinite number of losses, pretty much, that you may experience, of course.
Yeah, it has been...
That's just one trade.
One trade has made my year, in fact.
Correct, exactly. Now, let's talk about your own trading, because I feel that we have been focusing, of course, on the education side, but how do you split your day between your own trading through the capital account, through the account that you manage, and then teaching students? How do you go about your day?
And this is where organization is extremely important too. So I have the luck to live in Europe, in France, and so this means that I am able to trade during the best time period in the Forex market, the European session. This is when the pairs most of the time are trending, because during the European session, we have all the liquidities flows from the London Open and all the liquidities flows from the US Open. And when the liquidities of the US Open have been consumed, so the activity begins to decrease, in fact, and the trends begin to exhaust. And so I trade during the European session. I trade during 3 to 4 days per week. I don't trade the 5 days of the week, because when I find it is not interesting, I don't waste my time. I do something else. I like, for example, to practice piano now. And we teach during my evening, because it is an adequate time for most of the students around the world. So there is no overlap between my trading activity and my teaching activity, except when we make, for example, an open house for the non-farm payroll, or when we make a workshop for our students to illustrate some specific aspect of the max. Then at that moment, I don't trade, but I illustrate live the concept and how we apply them. So.
And
but mainly the teaching does not overlap with my trading activity.
Are you always trading the SAM system?
Yeah, personally, I trade only the SAM system. Yes, because it is the most advanced level of the max, producing the highest level of profits too.
Have you noticed over time that the Forex market is behaving in a different manner and that got you interested in trading other assets, or you still stick to both Forex and the MT4 platform for trading this asset class?
No, for the moment, I trade only to the Forex market because there are enough opportunities, but I always have a look to other markets. In my global context analysis, I always pay attention to what is happening in the stock market, and I follow several major indices, the S&P 500, the Dow Jones, the Nasdaq, the German DAX, the British FTSE 100, the Nikkei, the Japanese Nikkei. Then I follow also the commodities market with gold, silver, oil, crude oil, for example. And I also follow the bonds market because the bonds market is also a huge market. And it's the field of the big investors. And the big investors most of the time are never wrong. And so observing the bonds market gives a good insight of what can happen in the other market. So I make that intermarket relationship analysis to have every day an appreciation of the market sentiment, because behind the fundamentals, there is also the market sentiment, which can tell us, okay, the fundamentals are good to go in such direction, but the market sentiment today tell us to privilege the trade in the opposite direction. For example, when central banker is talking, when it is an important speech, then this can influence the market for some hours. And after that, the market will resume its fundamental movement.
So Eusebio, it's actually hard to argue that MT4 is a rather clunky, slow platform, yet you seem to stick with MT4 from the very beginning. Have you ever considered to transition your method of trading into other more modern, more responsive, more slick trading platforms, the likes of TradingView, or there's been never any consideration just because of the amount of indicators that are very much MT4 based? What's your view on that?
My view is indeed I'm considering to somewhere near in the future to switch to another platform like NinjaTrader, for example. Because NinjaTrader has that advantage to consider also the real futures market. If we want to trade a future instrument with MetaTrader, we are forced to trade the contract for difference, the CFDs, which are not allowed in every country, and which are instruments which are completely controlled by the broker. And I don't like that. So I prefer a clean market, a free market. And so to trade the futures, either on the indices or on some commodities, so I consider in a near future to switch on that platform. But I'm open. In fact, technically, I'm open to any platform. I like MetaTrader because it's a platform which is intuitively very easy to use. And to trade in the Forex, it's enough. We don't make scalping. We don't need to have absolute fast speed execution. If we have some slippage, small slippage, when we trade a trend, this will not make a big difference. So, and I have observed over time that the slippages have no consequence in my result. 2 out of 3 times the slippage is in my favor, which is strange, and 1 out of 3 times it's against me, but globally we have no impact. So,
okay, do you still journal, visually speaking, all your trades? I remember that when we used to take the assignments, we had to mark certain temps in the chart, and we were told, it was recommended that whenever we embark on a trade campaign, we mark those trades. And is that something up to this point, up to this date, you still do whenever you trade? Like for instance, last Friday, you may have taken a few trades, or last Thursday. Are you still doing that?
Nowadays, I make less screenshot of my own trades. Because I fully master the approach. And so when I make a post review of my trade, I realize that I'm making almost never errors. Sometimes I still make an error, and I try to correct it, of course, in a need of an improvement of my trading process. But no, I have a tendency to make less screenshot because I trade less over time. Also,
Yeah.
I'm approaching the moment I will consider to retire, and so on that aspect, I'm a little less disciplined. But I still continue to write my trading journal, where every day before a trade, I note how I feel, if I have the right mindset, what my risk will be, what are the points I will have to pay attention. So the preparation phase before my trading session and before each trade is still extremely important. So,
do you have any SAM trade screenshot where you can illustrate what it is like to be entering a few trades, scaling in, scaling out? Do you have that at hand here in your computer that you might share?
Yeah, in fact, what I do is I sometimes share such a trade on our website.
Okay.
Now, all my trading journal are handwritten, because I like to write hand, and so I have piles of piles of paper, piles of folders with a lot of notes, because I don't like to use Word or Excel or something because I memorize better when I write, when I handwrite. But from time to time, I share some information on our website, and I'm going to show you how we mark a chart, in fact.
That would be very illustrative for those that are not familiar, instead of just looking at the templates, but rather get into the action of how many opportunities might exist.
Yeah, I'm going to show an example. Okay, it is our website with our main page, which is the news watch list. And we have another section which is called featured trades. And from time to time, we add, and I'm going to show you that, we add a trade which is marked as I mark my chart. Now, what I'm showing is a simplified template. And so I show my entries, my initial entry, my initial stop loss, and then all my successive scale-ins, scale-in 1, scale-in 2, and so on, and my partial exit, MX1, MX2, and so on, until the final exit, which is noted XXX. And so for each of these decision points along a trend, for example, when I make a partial exit, I note also the number of pips which has been made, positive or negative, and then at the end of the trend, so I note what was the bias given by the global context and what is the result of that trade. So this is how I was used to mark my chart and to make a screenshot and to print that chart in my journal, trading journal.
Do you remember sorry, go on.
And you can scroll down and you will see a lot of trades, sometimes small trade and sometimes a big trade. For example, this one has been a nice one. So with many scalings, many MX. MX means momentum exit. So there are a lot of them over time with different types of instruments. For example, this one was a wonderful one with a 23-1 rework to risk ratio. So phenomenon trade on the euro.
Yeah. And again, we are looking here in terms of market dynamics. The market is most likely going to wake up and show volatility at the open of European session. And that's going to last. And perhaps you can elaborate on that. That tends to last until a few hours into the New York session.
Yes, indeed. In fact, I observe for now years and years that the main activity lasts until somewhere around the Wall Street Open. I have mentioned previously that we have two main times for the flow of money, of liquidity in the market, the London Open and the US Open. But we have a third time, which is the Wall Street Open. Wall Street is the stock market, but many transactions in the stock market imply also orders or operation transaction in the Forex market. For example, let's suppose a Japanese investor want to buy a big amount of shares in one specific US stock, for example, Apple. It's not a promotion for Apple, it's just the example. So he will have to change his yen into US dollar to make the transaction. And so this will have an impact also in the market, somewhere in the Forex market. And after the Wall Street Open, we begin to see the liquidities decreasing. And when all the liquidities are consumed, when we are approaching somewhere the Frankfurt close, and especially the London close, most of the trend exhaust. And we have some banking taking, which are made around the London Open. This is why we see after the London close, we see some pullback starting, but not very, very important pullback. So now when there is a news release during the US session, then the movement can last longer, even until the end of the day, in fact. So it depends again on the context. And we may have some trends starting around the Tokyo Open or during the ASEAN session, depending on the news, on the Aussie dollar, on the Kiwi dollar, on the yen. So this is why we have to take these news very seriously and to understand their impact in the market, because it is with these news that we can have many, many nice opportunities every day.
Do you remember taking a look back through your trading career, the maximum number of scale-ins you had in one day?
Oh yeah, yeah, indeed.
You do?
with the max standard, the maximum scaling I have made in just one trend was 12 scale-ins. 12 scale-ins among 14 which were available. I have missed 2 of them by distraction. And with the maximum, 27 scale-ins.
Wait for it, 20, wow.
But nowadays, it's almost impossible to have 27 scale-ins because rules are changing in the market. And here in Europe, the brokers have lowered their leverage. You can make 20 scale-ins when you have a high leverage. But when you have a lower leverage, 30-1 for the majors here in Europe, it is even worse than in USA. So we have less possibility. But a way to counter or to overcome that difficulty is to take a smaller risk per trade. If we take a smaller risk per trade, we have more flexibility in making scale-ins and we still get interesting results. Consider if you are able to trade every day and to make just 0.5% profit per day. In 3 years, with the compounding effect, you multiply your account by 3. If you're able to make just 1% profit per day, which is a big challenge, by the way, for many traders, in 1 year, you multiply your account by 10, which is huge. Just a small profit per day, multiply your account tremendously if you trade every day and if you apply a very strict process in your trading. In fact, one of the key I have discovered over a year about consistency is not necessarily to become consistently profitable, but to become consistent in the way to apply the trading process. If you apply the trading process in a consistent way, applying the rule with discipline and with patience, then the profit follows most of the time.
And Eusebio, that is the hardest part. As humans, we are flawed. We are always looking for the next shiny object. We are very intellectually curious. And we have something that in the trading domain, we refer to as system hopping. We're going from one system to another system to another system. What is the main technique, the main method in your own trading that has contributed for you to be so dedicated to just one single strategy and nothing else? Is it just purely based on the results that you have obtained? Is it because this resonates who you are as a human being, being very dedicated, being very disciplined, and always sticking to what you embark on? Please take it away.
In fact, no. We can use any trading strategy we want if we know how to apply it depending on the market conditions. In fact, there are traders who like to scalp the market. I have friends who scalp the market with success, but they take into account other criteria. My style is to trade the trends, and that forces me to understand better the market conditions. And it's a combination of all these things, the global context and the technique which provides the result. Now, of course, in order to go deeper into the understanding of the market, sometimes it's necessary to consider integrating or to try to integrate in the max some other tools. For example, for the moment, I'm making a huge work about the commitment of traders, for example, how the commitment of traders data may help to define when a long-term trend can be at an exhaustion level, for example. Now, for day trading, I also consider to analyze more in details tools like the market profile to define where we may have possible level of supply and demand, or to go into more details of the order flow technique to know what is happening in terms of fight between the buyers and sellers in extreme point, in a high, in a low. And so these are tools or approaches or concepts which may be interesting to consider. And if at some point they bring something new, which helps to refine an existing technique, and if it is compatible with the technique, with the max, why not integrating them in the max? And this is how the max has evolved over time.
And how the market has evolved over time. Let's face it, back in 2007, 2008, leading up to the global financial crisis, Forex pairs and the volatility around the pound, the volatility around the Japanese yen was way higher than what we are accustomed to nowadays. Has that presented difficulties for you to adapt to this new regime of volatility, lack of trends, sluggishness, so forth?
Yeah, that's an excellent question indeed. But you know, when I was working in the IT industry, my boss had an idea which was very interesting. And his idea was the following. The human beings have a tendency to go to the extreme, from one extreme to the other extreme. And we have a balance between the two sides of the extremes. And this is something which has always stayed in my mind. And when we have experienced the subprime crisis in 2008, end of 2008, we have seen for 2009, 2010, a tremendous momentum and tremendous volatility in the market. Trading trend was easy during those days. It was almost impossible to miss a trend and to make a big profit. Impossible. But I told myself, yeah, but this is an extreme, and someday the market will turn over and will go into the other extreme. How will the max react if we see someday a drop in the volatility? And this is when I have begun to think, and I have developed the maximum level to be able to trade usefully even smaller movement. And this is what we have seen. We have seen the currency war all over the world between all the main eight currencies, the G8 currencies. And we have seen progressively the average daily range decreasing. We are at a very low level for the moment. There are some signs which indicate that some volatility will reappear because, of course, we are living in a period where all the economies have been impacted by the COVID, and some countries have their economy better recovering than the others. So some tensions will reappear in the Forex between these currencies, and we may hope that things will improve somewhat. And so, yes, sometimes when the market is that way changing dramatically, it is important not necessarily to change the methodology, but to tweak some aspects, some details of the methodology. I have made two important improvements in the max. The first improvement has been with our ETF approach to define differently what is a trend. In the past, so a trend was defined as a movement on one side of a long-term moving average. And everything which was happening, for example, when the price was moving toward the long-term moving average, was not considered as part of the trend. But with a decreasing of the volatility in the market, this would have made trading a trend much more difficult. And so I have redefined the concept of trend, including also these movements, so below a long-term moving average. And the second improvement has been the max sum, introducing other price movement representation like the constant range bar, like the Renko, min Renko, to see many more details into the price action and to have many more decision opportunity. And this is the way to keep the profitability of the system at a right level. Now, if in the future we see an improvement of the momentum and of the volatility, this will bring additional profits with these tweaks in the max.
Yeah. Are you still defining the SAM candles based on the average to range in a given period? The SAM candles?
No.
Or is there a fix? Yeah. Go ahead.
No, but can you make your question a little more accurate?
Sorry.
More detailed?
Yeah, sure. Like when you decide the size of a SAM candle, SAM candle, is it that based on the average to range of that pair volatility?
Oh, yeah, it is based on the level of volatility in the market. And every day we may have a different size for the bar.
Okay. So that varies per day depending on the volatility in existence.
Yeah, in fact, this is what I have defined as the VEP process, the volatility equalization process. I have not invented that process. It is a process, I think, which has been invented by Case. You know probably the constant range bar, which is called the Case bar or the momentum bar, and she has invented that concept. And that concept consists in trying to stabilize, not to cancel the volatility, because we cannot cancel the volatility, but to stabilize the volatility on the chart. In such a way, the volatility appears as constant over time all along the chart.
Yeah, perfect.
And this is how we can optimally define the size of the candle in the constant range bar chart or the Renko bar chart.
Now, if you had to give me a percentage in terms of the number of times that you would be sitting at your desk and you would have a busy day taking trades and sitting idle, not having any trades, what would be the split between the days that it's very quiet, you don't take almost no trades, and the days where a lot of activity is around and you are actively engaged in the market? What would be the percentage?
In fact, I have even a precise objective, not necessarily in terms of percentage, but in terms of quantity of days which are active or not.
Yes.
I have defined the concept of true trend. And a true trend is a specific type of movement we see sometimes in the market, especially in the 5 or in the 15-minute time frame. And it's related to the length of the movement, depending on the volatility of the instrument we are trading for example, the pairs. And so we see such true trend on average 2 to 4 times per week, almost for all the pairs. And well, I cannot say for all the pair, but for most of the pair. If we go back on our website here, I'm going to show you something in our Newswatch list, which is, where is it? It is here. And every week we establish, I can go into the details if you want, but every week we establish a list of what we call the top pairs list. It is a list of 10 pairs, but we can take 14 pairs, 20 pairs if we want, among the 28 pairs. These top pairs, every week, each one has between 2 and 4 true trend per week, and sometimes 2 true trend per day. And with 4 true trend per week, we have enough opportunities. And when we have to trade a true trend, we are very, very active, because a true trend can last 3 hours, 5 hours, 6 hours, 7 hours. So,
what was it like trading the MAX during the COVID-19 crisis? And please finish what you were about to say, but that will be the next question.
The COVID has not created special problems with the MAX.
Okay.
Yeah, so I have seen no difference. For me, it has had no impact in the market, for what I see in the nature of the movement. The only impact I have seen with the COVID is at the beginning of the pandemic, we have seen an increase in the students wanting to learn a trading system. Because of the confinements and some of the lockdowns and so on. And after that, a few months after, the market has become more normal in terms of students enrolling in the course. So just a small effect in the teaching aspect. But in the market itself, no impact.
Okay, perfect. Is there anything you feel we haven't touched that you would like to present to the audience today?
Yeah, there is something I like to describe or sometimes to explain during our what we call the scrolling parties.
Okay.
You know that if we have a so high rating with our course, is because we give a lot of support to our members, because the aim is to make them become independent, as much independent as possible. So, and for that, every Saturday we have practice session we call scrolling party. We answer any questions they may have, and we practice the rules of the MAX on one chart which is chosen at random. So, and sometimes I give some philosophical explanations during these calling sessions. And one thing I would like to say is to explain is the 3 skills every trader must develop to become successful. And the first skill is, of course, discipline. When we use a trading system based on rules, we have to stick to the discipline. We have to wait for the appropriate conditions and all the conditions to be fulfilled before considering any decision. And so discipline in the way to recognize potential trade, discipline in the fact to establish a trading plan. I consider that establishing a trading plan is a serious task for any trader, because the trading plan is in fact a kind of checklist the trader must follow to consider, to validate a potential trade, and then after that to make a post review of the trade to see if the trade have been made following correctly the rules. So then the second skill perhaps is the resilience the trader must develop. We may have in our life, in our trading activity, some difficult moment. We may have a loss of confidence in ourselves, in the market. And this is why, by the way, practicing a lot helps to develop several levels of confidence. Confidence in the market, in the ability of the market to provide more opportunity than we can handle. Confidence in the trading system we are using in its ability to catch most of these opportunities, and confidence in ourselves, in our ability to apply the rules correctly. And so really resilience in a difficult moment, also when nobody helps us, support us when we are in need of help. So resilience is also important. We need to never give up, in fact. And then the third skill to develop is persistence also. And persistence is different from resilience. Persistence, when we want to achieve some profit or some financial levels, objectives, it takes time. And so we need to be persistent in achieving that objective. It takes time to become profitable at some point. We need to learn a lot. We need to practice a lot. We need to integrate all the details which make a trader a successful trader. And this takes time. So persistence in that effort, in sustaining that effort, is extremely important. And so never give up. And I like a sentence, a quote of one of my past mentors, because I have had several other mentors in trading before Jim. And that sentence was, successful trader never stop learning. Successful trader never stop learning. Every day is an opportunity to learn something new in our trading process. And so these are the 3 skills. If I had to give some skills to develop the 3 skills, I would like to advise, in fact.
Who's been very influential for you aside from the Tiger? Any other mentor that you could name?
Yeah, I can mention 2 of them who are retired now. The first one is called Tom Yeomans. And Tom Yeomans has been an important mentor for me to understand the importance of the news release. He was a specialist in trading news in a moment when it was easy to trade the news. If you remember in 2005, 2006, 2007, when a news was released with a big surprise, it took several seconds to the market to react. And so it was easy to take a trade in the direction indicated by the news. And there was some news for which we can predict almost for sure the direction the market will take. Over the years, the market has changed. And we have seen more and more manipulation, for example, by the big boys in the market. But manipulation can be also understood and the reason why they manipulate the market. A second trader which has had also an important influence on me in terms of the news release has been Jimmy Young, known as the Euro-US dollar trader. And he was a former bank trader. He has traded in important banks in London and in New York, I think. And when he retired as a bank trader, he began to teach some aspect of his trading. And I have learned a lot about the statistical aspect of the news trading with him. And there are some other traders who have had a smaller influences on a very specific aspect, but so not worthwhile to be mentioned here.
Perfect. Okay, so Eusebio, where can people find you? Website? Do you have any Twitter account, any YouTube channels? Please.
No, we are not very present on the social media, so we don't have a Twitter account, we don't have a Facebook account. We have a website and we have a small YouTube channel. We don't put a lot of effort on the YouTube channel because this is not what we are interested in, but we have a website which is called the Max Trading System, and the address is www.maxtradingsystem.com. And on the homepage, so we have some information about how we can be contacted. So we have an email address. So for example, I think it is somewhere here. Where is it?
Yeah, it's easily.
It is in the contact us page.
Yes,
so
exactly.
So we have an email address, maxtradingsystem@gmail.com. There is also the personal email of Craig, maxtrades4you@gmail. We have also a Skype ID, which is here, Max Trading System. We have a phone number, of course, and everyone who wants to have information can freely contact us, and so we will be glad to answer any questions. We have every 2 months some presentation webinars when we start a new cycle, of course, and so people who are interested to participate to these presentation webinar can put their email on the contact list, and so they will be invited whenever a webinar is proposed. And then there is some information about the different level of the course we propose.
Okay, Eusebio, so I'm going to be providing all this information in the description box so that people can actually have easy access to it. From my side, this is all that I wanted to ask you today. It's been an absolute pleasure to actually be bouncing all these exchanges of views with you back and forth. I believe that you have a true uncanny ability to be extracting money out of the market. And the thing that makes you so special is that, ironically, you don't focus every single day when you sit on your desk on the amount of money that you're going to be making, but rather on how you're going to be best protecting your risk. And you're going to let the market then determine what is the amount of profits that will be presented and available to you. And by approaching the markets in such a manner, you are really very much in connection to your true essence as a trader, which is at the end of the day, becoming first and foremost the best you can at managing your risk.
Yeah, indeed. This does not guarantee that we will have 100% success rate.
Correct.
I don't have 100% success rate. Sometimes my success rate is only 30%, and sometimes it's 100%. But what is important is if we control the risk with a good trading methodology, we can be profitable almost every day.
So with that being said, I stand to what I said in the introduction of this video. I still think that you could be a great trader to be featured in Market Wizards. So with that being said, thank you everybody for watching today's interview with Eusebio Nanni, an incredible trader. It is bye from me, Ivan. Eusebio, please. Thank you very much. And I'll see you hopefully in the next one. Cheers.
Yeah, cheers.